You're watching today's video technical update presented by FXTimes. It is Thursday, July 15th, 2010. I'm Fan Yang, your technical analyst, and I'll go over some developments in the Forex markets. There is some further greenback weakness across the board. We see rallies in the euro-dollar and the pound-dollar pair, as well as declines in the dollar-Japanese yen and dollar-Swiss franc pairs. However, commodity currencies such as the Aussie and the loonie are not faring so well. Let's take a look at some charts. This video is being produced at about 2:45 p.m. Eastern during the US session. Here's a look at the euro-dollar, and today's price action confirms our outlook from yesterday after we broke this declining channel resistance. And the target for this rally at the moment is the 1.30, 1.31 area for the euro-dollar, and this price action confirms it. The RSI broke above 60. So basically, what we have here is possibly it still could be a 1, 2, 3, 4, and then a 5, where this 4 is not just A equals C kind of wave ratio. It's more like C equals 161 or 150%, and that would bring it to 130, 131. So that's the area to look for resistance at the moment for the euro-dollar. And the greenback is actually weak across the board, and we could see that in the dollar-yen as well, the next pair here. Remember, I cautioned against trying to pick a bottom here at 87. The market did respect that 87 area, but could not break above 89, which was this previous low here, and now it's so this was support here, and now it's resistance. Market is extending this decline. Looks like it could break through 87 and continue towards 86 or even lower, which is this previous low here. So that's the outlook for the dollar-yen as the greenback continues to be weak. The dollar-Swiss franc, we've seen that slide from 1.17 area all the way down to 1.05. I mentioned that there should be some support here. There was only a temporary support, and then the market here basically broke below the 200 moving average in the daily, tested it, and is continuing. So the parity level is the next target for this pair, dollar Swiss franc. We do see this previous divergence, right? But what we also saw as I close in here was a negative reversal. So here you had your RSI rise higher, but here your price level was lower. So for the short term here, this type of price action was anticipated, so the market is following through this negative reversal. From the bigger picture, we see that we could come down further towards the parity level, and if you go like this, connect the lows here, we see that the target may be just above the parity level, actually around 1.01. We should see some support. If the market breaks that, we should switch to the weekly and consider a break. Basically, consider this type of price action. So a break below the parity level is likely to see this market continue lower to 0.76. So we're a little ahead of ourselves there, as the RSI here hasn't broken below 40. So that's where the market is right now, testing this support zone at 1.05, looking to break below it, but we should give it some chance to find a bottom, even though it already broke below 1.05. If it continues, if there's some confirmation of a continuation decline, then the 1.1 parity level is the next target. A break below that, as I mentioned, 0.97 area is the next target, and by that time we should see the RSI break below 40. Okay, so that's the dollar Swiss franc. Greenback weakness was one of the themes for today, but also commodity currencies were pressured. Here is the dollar Canadian dollar pair, And unlike the dollar Swiss franc or dollar yen, here we actually had the dollar gain against the Canadian dollar in the beginning of the US session. So this rally comes after this decline and consolidation near the right above the 78.6% retracement. So this looked to be bottoming action after this correction of this previous rally. So now we have actually a bullish outlook for the dollar Canadian, even though the dollar is very weak. We see here also a bullish divergence that is now materializing. So here in the 4-hour time frame, a break above 60 is a signal, a bullish signal. Although price action here already gives you a bullish signal as this breaks above the consolidation resistance. So here right now we have sort of a pullback or a throwback. So if the market can break above this resistance area, this 50%, actually no, this, so 38.2% retracement, get rid of that. So if it breaks above that and these two moving averages, if that could be confirmed, then we have further rally in this pair. Okay, so commodity currencies may actually be weaker than the dollar if such price action continues. Now switching over to the Aussie dollar. So the Aussie is also weak here. To start the US session, just like the Canadian dollar, it was gaining against the US dollar, but there is a pullback, or in this case it's staying within this consolidation, staying above the previous consolidation area. So this is further Aussie strength against the dollar actually, but we do see that momentum has paused and there is a divergence. Okay, however, we also see a positive reversal here as the RSI is either flat or even lower. It appears to be flat, but the price action is higher. So another rally can be expected, okay, as such, towards the 0.89 area. Okay, so the Aussie dollar may be a little bit stronger than the US dollar, while here you see the Canadian dollar may be a little bit weaker than the US dollar. Alright, and that wraps it up for the day. Check out FXTimes.com for more updates and live events. Once again, I'm Fan Yang, your technical analyst here at FX Times, wishing you good trading.